I think silver is going to explode to the upside. And I'm watching myself say this, Elijah, thinking I can't believe Pete Grandich is saying this, but I think silver could be triple digits.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for August 25th through September 1st, 2025, while supplies last. First this week, 1 ounce gold Britannia are just $60 over spot per ounce. Next, 1/10 ounce gold Canadian maples are only $35 over melt per coin. 1 ounce silver maples are just $2.89 over spot. And 1 ounce silver kangaroos are only $2.79 over spot per ounce. And with a 250 ounce monster box, they're the lowest priced monster box available. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Peter Grandich, the founder of Peter Grandich & Company. Peter, thank you so much for joining us today.
Always a pleasure to speak with you, Elijah, both personally and spiritually.
Well, it's always great to see you, Peter. Thank you so much for joining us today. Now, if our viewers are interested in learning more about your company, they can go to petergrandich.com. What I would like to discuss today, first and foremost, is kind of your outlook for the stock market going forward. Now, for the longest time, you were not saying that the stock market was most likely not going to experience a crash, but recently you have become more and more concerned about the levels that we're seeing for the stock market, and actually the potential for a crash is really there now. Can you expand on that and kind of what changed your view on that?
So I began the new year as a forecast saying that when the year was over, the Dow would be either side and the S&P of unchanged, maybe 5% one way or another. So I was not in the camp of people that were going back then and even before looking for, a crash or an extremely hard fall more of 20%, which would signify a bear market. However, about 2 weeks ago, somewhere in the middle of August, that changed. And it got to a point where I said, while I still believe the rest of August it can go higher, that after Labor Day, I think it's time for people to get in a much more defensive position. There are a lot of reasons. I'm sure you've heard from other guests already. Valuations at their highest, speculative levels showing people's excess. We have the public record buying of stocks, while large so-called, I don't know if you want to always call them smart money, but certainly large institutions are being major sellers. I've never seen in 41 years the public beat out the institutions over a long period of time. And they tend to be the last one in bull markets. There's a whole bunch of other reasons going back to this trade war, which if you think about it and people would just move away from the lapdogs, how I describe some of the people around Trump, there's been no real success on the trade war, no matter what anybody tells you or tries to make. If you remember all the promises, 90 trade deals in 90 days, all these people were going to be at Trump's feet. And other than the European Union, which hasn't even moved forward to formally do theirs, now we have the Japanese backing out, the Chinese are not going forward, India's turnaround. And so there's a lot of economic evidence that we are heading into a much more challenging time when stocks are at record levels. I'll put it very easy, Elijah. I've been a simplistic person. I don't use big words. I'm not a big college grad guy, and I keep things fairly simple. But one of the complaints that I heard, not to me directly, but from investors in general over decades is, you folks on Wall Street always tell us when to buy, but you never tell us when to sell. And many, many years ago, my mentor at the time said to me, Pete, one of the first reasons you start to sell is when you can no longer first buy whatever you own. And I don't believe I could start a general equity portfolio now in U.S. In fact, when I began the year, Elijah, I suggested to our clients of our planning group and anyone that wanted to listen that if you are going to own equities that are ex-U.S. equities, meaning world funds that don't hold any U.S. exposure. And in particular, a country like China that I thought would outperform the U.S. And both of those have greatly outperformed the U.S. stock market. You know, there's a lot of excitement now, and I know I'm going on here, but because we went down sharply briefly in April and had this rally, there's a sense that this has just been a magnificent year. But right now, the U.S., despite all of this, has not been able to outperform world markets, emerging markets, China, and best of all, it's not even come close to gold and silver. Yet, if you turn on a financial network, that's all they talk about is the U.S. market. So all of that led to this belief, but because the last 2 weeks in August tend to be extremely seasonally bullish because people are taking their last of their vacations and all, I said not to worry about a defensive position until after Labor Day, which ironically, we begin one of the more seasonally weak periods for the stock market, September into October. So all in all, I think it's the greatest minimum now. You need to be much more concerned about the U.S. stock market now than you might have been a few weeks ago.
No, we are seeing developments from the Federal Reserve talk about, at least it seems to be dovish comments. A lot of people are expecting a rate cut in September, probably about a quarter point. And this could be, potentially Powell caving into, pressure from Trump. But your perspective on that, is Fed action here going to be helping the situation at all? I know you mentioned recently in a video that it could be a little bit of road repair, but it's not fundamentally going to fix the situation here.
So first of all, I'll say that when the last time I saw Powell standing with Trump, Powell looked like he just went 12 rounds with Mike Tyson and lost. He looks like a man that was very beaten up from this constant pressure from Donald Trump. Justifiable or not, and not here to discuss that. So my whole argument about the last 40 years or so is that for the most part, the Federal Reserve has aided and abated the equity market by basically maintaining a one-way road, basically running at all time and just put your pedal to the metal and go forward. Because if and when there's been any type of cause, financial crisis or whatever, the Fed has stepped in. It's printed all sorts of money along with the government. And it throws what I call, spreads money on this road, soaks up whatever caused the accident, and then tells the person it's okay to get back in the car and drive forward. And we have a financial advisory industry where almost 60% now of financial advisors weren't even born when I started. And 80% of them weren't even past elementary school. Now, that doesn't mean that they're all going to be wrong and somehow going to be right, but I will tell you this, and I think it's true in all professions. Experience is an extremely important asset to have. We learn from it. Anybody that 65 and over will tell you that they feel they're more mature and smarter now than they were when they were 20 or 30 or even 40. And so we have an industry that really has been used to one way. And so the concern would be is anything less than that one way, just two-way traffic, let alone a traffic circle or a traffic jam. I think the industry and investors are going to be at a loss on what to deal with it. And so with us at this extremely high levels and other markets that look much more safer and better to own, including the metals, I just think it all comes together that this is a period now where you don't want to be brave. You want to be a live chicken versus a dead duck.
Definitely. And you've mentioned how really the middle class is completely unprepared, especially those going into retirement soon. The fact is, and you had our warning against this, that now it's actually possible for a lot of Americans to invest in their retirement funds, invest in private equity and also cryptocurrency, which in your view is those are even more risky than the general stock market. Can you kind of break that down for our viewers? Why are most Americans, why are their finances at such high risk levels right now? So
we have what's commonly known as a K economy. First of all, the 10% wealthiest people in America own 86% of all the assets. The next 40% own about 14%, and the bottom 50% don't own any. Now, Wall Street basically caters to that 10%. I mean, the lower echelon of advisors, people that don't manage a lot of money and all, they'll deal with that 11 to 50% people that have some assets. But Wall Street talks to that group. Now, that group at the top is not hurting. In fact, they have benefited greatly by the way the country's been run and markets in that general. But the rest of the group, especially the bottom 50%, we have 2/3 of Americans working paycheck to paycheck. And in just the last couple of years, they have seen just about everything they need as a necessity go up in double digit. Energy costs, electricity, home insurance, medical insurance, car insurance. If who's ever listening to this is going, yeah, you're right. It went up 10, 15, 20%. So when you're working paycheck to paycheck, there's not a lot of room. That's why on that bottom 50%, half of them, or 25% of all workers now in the United States, are using some sort of debit mechanism just to buy necessities, a credit card, a debit card, or even these places where you can order food and you can borrow against that as well. And this is not good. And this is heading in a very bad direction and all. Now, let's talk about the second part. I gave probably the biggest part of that commentary that I made that you referred to a couple weeks ago was about this horrible decision to allow the public to take retirement money and invest in private equity. First of all, private equity isn't anything close to what it's been made out to be. In fact, the whole idea about private equity was it was just going to be that for more sophisticated investors who can take the bigger risks that come along in these type of things. And the problem is, for them, many of them have done poorly. So they pressured and have somebody that in the White House that is favorable to in the investment world say, okay, let the public come in now. And basically the public's going to bail out the bad mistakes of the private equity industry. And this just comes at a time when speculation in everything is excess, including crypto. I'll stand here and tell you this. I'm not going to argue about Bitcoin. And we just had a guy now that came out and said it's going to be worth 10 trillion. You know, my argument is I've heard a few years ago it was already supposed to be 1 million. Some people said it was going to be 5 million. It can't even get above 125,000. And basically for 4 or 5 years now, it's been flat and gold has actually outperformed it. But we'll leave Bitcoin alone for a moment. I'll tell you this. The biggest thing that they'll look back is I would rather have a pile of you-know-what than any meme coin, because a meme coin has absolutely no value. At least that pile I could use as fertilizer in my backyard. It has some value to be used on. And yet we have so much money that's poured into these things. And now we're going to allow people's retirement money. Remember now, 2/3 of Americans don't even have $1,000 saved for emergency, but we're going to have what little they have in retirement go into these much higher risk investments at the time when the market is clearly, even bulls will not say it's cheap. So it's a very poor decision. I think it's going to lead to more calamity and just add to the mounting problems we have in the United States here, economically, socially, and politically.
Now, we often talk with you about different signs of financial crisis coming soon. One sign that you have noted is the strange action we've seen in the bond market. So governments have been and central banks have been maybe slowly starting to cut rates, but bond yields have actually increased. And this is not normally what you would see. So can you unpack that for our viewers? Why is this concerning at the moment?
Well, let's take even the biggest concern as you and I speak. The IMF is talking about a possible bailout of both France and the United Kingdom now. We've just seen yields in France double in a year at a time when central banks in general have been easing short-term rates. And that goes to the big, and also in Japan, which is probably worse situation than the UK and France combined. So here's the issue. These countries have eased or tried to lower or have lowered short-term rates, but their longer interest rates went higher. And people say, well, how is that? Well, first of all, just like here in the U.S., a year or so ago when the Fed eased, short-term rates went down, but the long end went up 100 basis points. And the reason that's happening now is, and people can say, oh, you guys, Elijah, and those guys have been talking about years about the debt problem. And that's right. The bond market's telling you now it's a serious issue because they're concerned about the fact that easing and adding more money is going to make it even more difficult down the road. And therefore, you're going to have to pay me a much higher yield to where real money goes, and that's in the long end. And remember this, all these consumer things, whether it's cars, mortgages, credit cards, they're all based on what long rates are doing, not what short rates are doing. And the Fed knows it itself, that it can only influence the short end. So the surprise, even if the Fed does act, which it's likely to act, that the only way the Fed would not act with an interest rate reduction in September, if somehow the employment numbers reverse back up and they're not as bad, and this readjustment number that's going to come out is not as bad. Now, I don't think Trump's guy or folks are in there yet, so they can't massage the numbers back to the way that he'd like to see it and so forth. But I do think they're going to cut rates. And the shock will be a year from now, even if they continue to cut short-term rates, that the long end could actually be higher than it is now. And that will cause much of a big problem. Now, the average investor is not looking at that yet, but I've been saying this for several weeks now, and I'll say it to your audience as well. I wake up in the morning and I don't see what the S&P futures did overnight as my first thing. I've seen what bond markets did around the world, because the bond market is far more important to our economic well-being or lack of well-being than the stock market will ever be.
No, we talk often with you about precious metals, and in this financial storm that we're likely going into, I know that you're very bullish on precious metals, and especially the miners at the moment, being, it seems like, extremely undervalued, having good cash flow, a lot of them. You've actually sold some of your physical gold position to invest in miners, if I was hearing you correct on a video that you posted. Did you want to give us an overview of your perspective on the precious metal sector right now, especially with respect to the miners?
So first, I still believe gold and silver are going higher, particularly silver, which is, anybody that knows Peter Grandich from just past a few months ago say, did Peter Grandich just say he was bullish on silver? Because I always treated it as second class to the gold itself in terms of ownership. Not that you shouldn't own it, but, there's been people for silver for decades, and, it underperformed quite a period of time. However, early in the year when it got below 30, I flipped the switch and I became as bullish, if not more bullish, on silver and gold. And I'll touch on that in a moment. But the first important thing is, so earlier in the year, after owning gold for as cheap as $1,300, when it got up to its highs or within $20 of the highs, I made a decision that the major producers now could do better than the physical gold price. Plus, gold needed to go through a very long consolidated phase because of how fast it rose in the previous 12 to 18 months. So I went into the major gold producers. Then, when they did as well, and they're going to continue to do well, they're basically record amounts of free cash flow in the sense they're printing money. The bottom line then was, well, the next order of business is, you have all these folks on Wall Street telling us about AI and all these centers and all these needs. Well, they need two things. They need electrical power, which we have a huge problem. You know how I feel about the grid and the inability to deliver power. But it also is going to need a whole bunch of metals. And that's why, another metal that I like very much is copper. But there's been such a lack of worldwide exploration for these metals. The world has shrunk to where companies are willing to go because of economics and social and political causes. So I backed up the truck, so to speak, in the most riskiest of the type of stocks, what we call junior resource stocks or exploration stocks. But I want to say one thing about it. Gold and silver are just trading the best you could expect at this point in time. And as you and I speak, they're both on the verge to run, but the one that could really run, and again, I have to check my mouth that I'm actually saying this to you, I think silver is going to explode to the upside. As this chart I know you're going to show, going back 50 years in silver, there's been a 31-year formation of what we call cup, and then an 11-year handle. Now, if you remember a couple of years ago when you and I first started speaking, one of the bullish things about gold back then when it was under 2,000 was it had an 11-year cup and handle formation that was ready to be taken out. And cup and handle formations 8 out of 10 times break to the upside, not to the downside. Well, silver, as you and I are literally just about to break out above the handle, which at 40 or more would clearly break out. Taking that just from the technical aspect of that, you could argue from that formation minimally, and I say this minimally, and I'm watching myself say this, Elijah, thinking I can't believe Pete Grandich is saying this, but I think silver could be triple digits. That means it's going to go to $100 or more. And so I'm real excited here. People need to know it if they don't know me. I've never been a silver bug, but I really think the time has come, and I really think it's well. And even to the point that in your business of ownership, not only would I consider 50% ownership in the physical ownership, I might even overweight it in silver right now. So I'm about as bullish as I've ever been, ever, in the combination of both gold and silver.
I mean, I definitely think that's significant. And the silver itself, it seems like there's a lot of people out there who have been talking about the silver story. You know, there's a silver deficit. You have the gold-silver ratio that is historically high. You have silver being used in so many products. You have obviously the development of AI using a lot more silver, green energy, all of that. How much of your shift in position here now to being very bullish on silver is because of the fundamentals, and how much is more from a technical level looking at, as you mentioned, this cup and handle formation?
Probably 50-50, Elijah. I think the fundamentals are clearly better. See, there was always an excess 20 or 30 years ago. There isn't that excess now. And the other thing is it has so much more demand and usage from an industrial usage. It's still not a monetary. I know a few people try to argue that. The central banks are not buying it in any large quantity, although out of the Middle East, we've seen a significant purchase, and that may be changing. The ratio is another reason it got way out of whack. Not that it has to be any certain ratio, but if you're going to use historically, it seemed to be favorable. And then it's just that chart. I mean, that chart, there aren't a lot of technical charts that have outstanding 8 or 9 out of 10 times it works a certain way. Cup and handles, especially the longer they are, have about an 80% correlation of that when it breaks the handle to the upside, they go up substantially. So all those things combined, and throw in the fact that the things that have been competitive against gold and silver, the stock market and crypto, they look like they're peaking. So 12 to 24 months out, they could be in a much better environment than they did previously. And I will tell you this, if we're right about the technicals, I'm not saying what's gonna, but if we're right, we're going to see momentum players show up. And when momentum players show up and the charts really take off, then all these generalists are going to get calls from their institute. How come we don't own any silver? What can we own? And you know how I know that? In the last 3 weeks, maybe the whole month of August, I heard from 10 people that I haven't heard from in 10 or 20 years. In fact, they thought I was already out of the business because I left the metals and mining business in 2013. But they saw me somewheres and all, and they're starting to go, hey, I'm starting to hear from people that know what they're talking about. What are you looking at? And I just think if we get this breakout and it's being talked even in the general financial media, the fundamentals and the supply and demand argument is so bullish. So that's why I'm so optimistic.
Definitely. I think even though precious metals have moved significantly in the last year or two, it's still not in the mainstream. We've talked with you about this before, how it seems like it's just kind of the insiders moving at the moment. It's not the retail public, which is a sign that, it's not like we're at a bubble top or anything. Most likely, we still have quite a bit to run. Obviously, we can't give financial advice, or we don't have a crystal ball or anything like that. But just from our analysis, it seems to me, and it seems like you're concurring in this, that there's still significant room to the upside.
Let me add this before your time runs out, Elijah. This is critical because this is how some people think right now, even people that are bullish on the metals. I hear this a lot. I don't mean directly to me, but I hear that when people speaking online or whatever the case may be. Well, gold's moved up a lot. How much further can it go? How could it possibly go to 5 or 10,000? So when I first thought about coming in the early 1980s, when I effectively became a stockbroker in March of 1984, the Dow had gone 13 years trading between 700 and 1,000, to the point where in 1982 or 83, Business Week ran a front page story, which everybody on Wall Street spoke around, called "Equities Are Dead." They literally, along with many others on Wall Street, viewed that just because of everything that was happening in the world and how bad things were, and Russia and the United States are going to blow each other up, Japan was going to take over the world back then, yada, 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 the Middle East. They didn't think it was possible for the Dow to go much above 1,000. And then a young man who ended up helping me a lot in my career, who no one heard of beforehand, came out of Gainesville, Georgia, named Robert Prechter Jr., with something called the Elliott wave theory, which no one was familiar with, and said, the Dow's going to 3,600. And the few people that put them on financial shows, they just put them on like, oh, you were putting on like a clown to show what an idiot this guy. How could the Dow go to 30? I remember people going, sir, how could it's never been above 1,000? And he would give the reasons and so forth. It went a lot further. It took decades, but it went a lot further than 3,600. And so I think it's a mistake to just simply say gold can't be 5 or 10,000 because it traded for so long between such and such a price. We have no idea or argument about that and so forth. Just recognize that right now, the vast majority of people, certainly in North America and particularly in the United States, don't own any. None. Not a mining stock, not physical bullion, nothing. And if that half or 1% or wherever it is, it's somewhere in that range, just switches to 2% of their portfolio, the numbers are incredible what they can get to. So that's one of the many, many reasons I think it's still important to stay very constructively bullish on precious metals.
And if our viewers are interested in learning more, they can go to petergrandich.com. And again, I mention this every time, but one of the things I really like about your work is you integrate your Catholic faith into your work as well. So did you want to share with us a bit about the work that you do, how people can find you, and also how your faith is related as well?
Well, the majority of my work now is on my X page. So if you go there, at Peter Grandich, that's where I do the bulk of it. PeterGrandich.com will explain I am part still of a planning group. We manage a little bit over $1 billion. It's very hard when we look at the incident that just happened. I have worn, like you, our Catholic Christian faith on our sleeve, both in business and personal life. It has its positive and has its negatives. Sometimes I think the negatives outweigh the positives, but the positives bring such joy that you don't mind the negatives that come with it. But I have long argued this, and you know that. It's been in my work, that you strip away all the secular things that you and I spoke about today. If you really want to know at the absolute core of what is causing some of the most severe issues and horrors in the world, it's because there's been a spiritual battle going on for a couple thousand years. So when you see an action that was taken just the other day, it's not just some human that had a bad day or had a mental defect. It's demonic forces. That person was no longer in control of their own mind or body. And some people will see this now and just laugh at that. As some of these crazy religious kooks this guy Grandich is. But that's what I believe, and I believe there's ample evidence to know that. And so to go in life and to think that this is just it, you're going to look at markets and all in a whole different realm than somebody that truly is living out this Christian spiritual life. And let me say this, if I didn't pee off some people, I've had 10 issues that I've spoken about that are very troublesome in the world. But as you know, several months ago, I added an 11th one. And the way it's going, it could move up to number 1. And that is, there is an attack in the Western civilization on the way we live and how we live it spiritually by a group that not only lives dramatically different than we do, but they have no room for anybody else but how they live. Not that they're willing to share space or say, you go over there and we'll just take care of ourselves over here. If you're not one of us, we want you dead. I don't think people realize yet in America, even though it's growing here now as you and I speak, what that means. But I say to them, if you want to know where we could be 5 or 10 or 15 years from now, just look at England, France, Ireland, even Canada, 10 or 15 years ago, and look at them now. And that's what our future is going to hold. And with all the other problems we have right here in the United States right now, add that to the issues, and I think we're going to be into much more dire straits. And that's troublesome because that is where your faith either plays a role or doesn't. And I just, I know what my teachings that come from. I know what Scripture teaches us. I know what the church teaches us. And I know what I believe. And their choice and the way they wish to live is in no way, shape, or form anything I want part of. But they're not willing to say, okay, you do your thing over there and I'll do mine. No, Peter, if you even try to do your thing, we want you dead. And that's going to be a tremendous challenge here in the United States. And if you don't think it can be, like I said, just look at those other places, which just 10 or 15 years ago were saying some of the same things Americans are now saying about the issue.
It is definitely concerning to hear a lot of the things you're saying. I think a lot of people have been hopeful over the last few months when, Trump being elected and a lot of these executive orders pushing back on the woke agenda and all of that. And I guess in some sense trying to preserve our Christian heritage, but it's a lot by executive order. And there's a lot of, if things can be pushed through super fast, they can also be taken back super fast as well by the next administration, whoever that might be. So yeah, I think the people really have to, start preparing mentally and spiritually, right, for that kind of persecution potentially ahead.
Well, let me just close with this because we could talk about that subject for hours, and I don't think people tuned in just to hear about that. But Scripture, whether you want to view it just as an historical book or a book of religious spiritual meaning, that book has more verses, and half the parables are about things that relate to what you and I are talking about, things about money and so forth, than even what you think the ultimate two subjects would be, the heaven or the hell. And yet we find people, even on Wall Street, who, even when I wanted to open our business, I was told you could put a rock on the door, you can put a bull or a bear on the door, but you're not going to put God's picture on the door. Wall Street almost deters tying faith and finance together. Yet many people that are going to watch this, or maybe not watching, but are out there, believe they're practicing a faith, but they're investing in a very unfaithful way. And then they worry about and wonder why certain things don't work out. I don't believe that just because you're a Catholic and Christian, gold's going to go up because we bought it. But I do think that there's teachings in Scripture that can help make decisions and start to explain some of the things that you and I talk about. And the very fact that you give me this avenue to speak about, I see it because of what people write after your video. Sure, I'm sure there's people in the comment section, they say things, but you should know this because maybe I haven't even had a chance to tell you. Some people are very, very grateful that we were at least willing to talk about what we just spoke about in this last part of this interview, which isn't done at all anywhere else. In fact, the one time when I used to be regularly on a certain financial network, I started to talk about this in my early days, and they told me when I was done the interview, Peter, if you ever bring that up again, we can't have you back on. So there you go.
Well, Peter, we always really appreciate your time, and our viewers, as you mentioned, really appreciate this discussion also about faith as well. So thank you so much for your insights today, and God bless.
God bless you, my friend.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for August 25th through September 1st, 2025, while supplies last. First this week, 1 ounce gold Britannia are just $60 over spot per ounce. Next, 1 10th-ounce gold Canadian maples are only $35 over melt per coin. 1 ounce silver maples are just $2.89 over spot. And 1 ounce silver kangaroos are only $2.79 over spot per ounce. And with a 250-ounce monster box, they're the lowest priced monster box available. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.